In this video, we'll show you how to go long or short oil in a limited risk, limited reward way using Nadex knockouts. Let's get started. Once you've logged into your Nadex trading account, on the top left-hand side of the platform, click Knockouts and then Commodities. Under Crude, you'll see the various knockout ranges that are currently available. Knockouts have a weekly expiration. Next, click on a specific contract you're interested in. This will populate a chart showing the price of oil as well as bring up an order ticket on the right-hand side of the platform. On the order ticket, you'll see the specifics for that knockout. This includes the range of the contract, the current indicative price of oil, and when the contract expires. For crude oil, the range is always $5. These are the terms of the knockout that we've selected. This crude oil, September, 38.50 to 43.50 contract expires at 2:30 p.m. Eastern at the end of the week. If you predict the price of oil is going to rise, you buy a price level to initiate the trade. The range boundaries around your entry price indicate where, if hit, you'd be knocked out of the trade, making a profit if the upper limit is touched, 43.50, or taking a loss if the lower limit is touched, 38.50. If you predict the price of oil is going to decline, you sell a price level to initiate the trade. Again, the range boundaries around your sell level indicate where, if hit, you'd be knocked out of the trade, making a profit if the lower limit is touched, 38.50, or taking a loss if the upper limit is touched, 43.50. The prices of knockouts will constantly fluctuate as the underlying price of oil changes. In fact, the price levels you trade for knockouts will typically track the underlying price of oil. For example, if the indicative underlying price of oil were 41.03, you might see a bid-ask spread for the knockout of 41.01 to 41.05. Those are the levels where you could either buy or sell the knockout. Essentially, when trading knockouts, you predict whether the price of oil is going to rise or decline. And you have distinct knockout levels to either take profits if you're right or limit losses if you're wrong. On Nadex charts, you can quickly and easily identify which knockout range best suits your trade around the current indicative price of oil. At the bottom of the order ticket, your potential maximum profit or loss is clearly calculated before you enter a trade, whether you're buying, going long, or selling, going short. An important note when trading knockouts: you can exit a trade early. Just because there's an expiration associated with the contract does not mean you have to wait for expiration to see what happens. You can choose to close a position early if you'd like to lock in profits or limit losses. To close a long position, you'd simply sell it at the current market price. To close a short position, you'd simply buy it back at the current market price. If the price of oil doesn't hit either the upper or lower range of the knockout, the contract will settle at an expiration price. The profit or loss on your trade will be the difference between the price level you bought or sold and the settlement price, excluding any exchange fees. And there you have it. You can now leverage Nadex knockouts to trade the price of oil, whether you predict it's going up or whether you predict it's going down.